Just in time, Tevis.
Trying to catch me offside.
Yeah, just in time. Ladies and gentlemen, welcome to the Tevis versus Roy presidential debate. They're going to talk it out. I mean, Tevis might be a little slurry, but he means well. Well, Roy's got all the facts. So, Tevis, how was your day?
Yeah, that whole I'm not as sharp as I used to be. I'm not as fast as I used to be. Whatever he said, but I'm honest.
I don't know what you're talking about.
Well, Biden tweeted after the debate. Well, he tweeted live tweeted during the debate too, but after, I think today, he tweeted. He was like, "Look, I might not be as sharp as I used to be. I might not be as clear as I used to be, but I'm honest." I was like, "Okay, that's fine. That's cool. Thank you."
I'm a Canadian. I don't know what the heck you're talking about. I'm just talking about you guys debating the two presidents of my heart, the heart of the SoFi community.
Yeah.
Tevis, what have you been up to this week? Not just today.
Okay. Not much, just work.
Yeah? Buying any stocks at all?
I did not buy anything this week, I don't think.
No.
I'll probably buy some stuff next week.
Yeah, there could be a good deal on SoFi or any other stock you like. I don't know. I don't know if you're trying to chase the dragon on Unity. I mean, it might be.
I actually talked about this on the bootleg 2 days ago because people asked me if I was still buying. And I basically said in that podcast, I'm not going to be buying until or unless the fundamentals start turning around. Yeah. That company is in some dire straits, man. Like, they need to get their financials back in order. They need to get their expenses back in order. They need to get a permanent CEO with a vision. There's a lot of stuff that's still missing. And unless they can do that, then I'm not going to be buying more.
Roy?
Yeah, throw this meme up real quick. Yeah, it kind of says it all right there. So out of these three, I own all three. Robinhood is the darling in my heart because it's actually performing well. PayPal is drowning. That's the only stock that I bought. I bought something to swing, but the only stock, long-term investment, that I bought this week was PayPal. And I'll keep buying PayPal for quite a while. SoFi, I'm good with what I have. If it goes under 550, I'll add more. I hope it doesn't, but I will. And I'll add a little bit more here and there. But yeah, mostly it's just PayPal.
But are you touching Robinhood at these prices, or are you just holding at these prices?
What I've been doing, I have only leaps. So full disclaimer for everybody that's like, oh, I bought last May. So these are all long-term at this point. I have taken gains along the way just because I knew that this was a trade. And with leaps, you have to take gains more aggressively than otherwise you might like. So I still have a pretty healthy position for Robinhood. It's the second largest in my portfolio. And I think I'll have to look, but Tesla will actually come close to it when I get the final order, and depending on what the price is. But no, I'm not touching it. I will sell some once we get to 26. Actually, a good chunk of my remaining portfolio. I think a third of the remaining Robinhood shares. And then I'll continue to sell here and there. It may be lower than 26. It may be higher between now and next January. I have plenty of time. And so the only thing that I've been doing with that is selling poor man's covered calls. If people are not familiar with them, do not do options unless you understand them. Take time to research. This is not an options channel. Get some training on that. But all it is instead of having 100 shares that I'm selling the covered call on, I can sell based on that leap because that's collateral as well. And so these are well in the money. It's actually the perfect setup for poor man's covered calls, especially with the volatility that we've been having. So I think I was telling Tevis, I know I was telling somebody how much I've been banking over the last 6 to 8 weeks off of Robinhood for the poor man covered calls. And it's a beautiful thing. It's just when you paid well, I won't get into how much I made, but it's just been really lovely. This range with the volatility and everything, perfect setup. And, if Robinhood pumps to 27, 28, and someone might get called away, that's perfectly fine. I'm going to sell at 26 anyway, if we get there. I mean, there's no guarantees.
So you're doing covered calls on your leaps?
Poor man's covered calls. Yeah. It's instead of having 100 shares as collateral, you have the contract for 100 shares. And so you can still sell. Some platforms don't let you do this, but at least Robinhood does. And you can sell calls off of the leaps. Yeah. There's some people that I personally wouldn't do this, like full-time is my main thing. Leaps are a small part of my position, except for Robinhood, for any stock. Like I just don't have a lot of them, but some people will intentionally buy calls deep in the money and then sell covered calls against them. And that's a different form of leverage. So I don't know. I
Cool.
figured I might as well make some premium. We're sitting in a range. I don't mind if I lose the right to the shares, the options. So I'm just making money while we're trading in a range. And when there's a lot of volatility like we've been having, it's pretty good money.
I think if I even start saying any sentences on covered calls, Steven's going to join soon. It's seemingly every time I talk about it, he ends up popping up. I don't even give him the links anymore. He finds them somehow. I don't know who's giving them away. He finds his way onto the stream.
Oh, man.
But that being said, so just to learn a little bit more about your strategy, what is the time frame? Like, how far out are you doing? Like, how far out is the strike price?
These are usually weeklies or sometimes 2 weeks in advance. So I'm mostly selling theta, that's the time decay, and vega, which is volatility. They're always out the money. Ones that if I'm selling like a normal position for me where I'm selling covered calls like Palantir, I'm doing 0.05 delta, which this is not what delta is, but you can kind of think of it as like there's a 5% chance that those will run into the money. That's roughly how some people look at those things. And I'm prepared to roll the calls, which means to buy them back. Robinhood, though, since I'm planning to sell some of those anyway at 26, whether we're at 22, 23, 24 at Robinhood, I'm like, you know what? I'll freaking sell these at 26. I don't care. And if they go in the money, so be it. Versus the rest of them, I'll sell them at a little bit of higher premium, depending on what delta is looking like and the odds for those to roll. Because I don't mind exiting about a third of my remaining position at 26. And then the rest, I have two different levels that I'll get rid of between now and then. Unless, by the way, Robinhood says it's a long-term hold, and it's done exactly all I could ask for it, honestly. If there's a position where I'm like, hey, I want to finish this, I want to build it out, or like something crazy happens. So let's say SoFi goes down like $4 a share. It should not. I'm not saying it will. If it does, I will own no more Robinhood. There will be a lot more SoFi. So it's sitting there as a piggy bank.
Yeah. I just want to stay on Robinhood because they had a few pieces of news really quick, and then I want to get over to SoFi. But as a large competitor, as one that a lot of the people who are even here that trade SoFi are doing it on Robinhood, let's just quickly talk about a competitor really quickly. So one, they got a pretty massive upgrade by Wolf Research this week. I think it was this week. It was either this week or very late last week. For $29 a share by end of year. Sachin, if you want to come on, we'd love to have you. Teva, send him out the link, please.
I think that we friended each other. I
don't think I have him on Twitter, dude.
Okay. Well, Sachin, you can reach out to me on X in the DMs. I think your DMs are closed, but or maybe you followed me actually. Anyway,
Sachin, I sent it to you, by the way, in case you want to follow us.
Yeah, he's following me now. I can send it to him. Okay, perfect. Anyway, he got it. So I just wanted to say Wolf Research gave a $29 price target, and they believe that the stock is going to continue to have very, very long-term growth. I think they said $1 of EPS by 2026, and that most estimates are about 70% lower than where they should be. So very interesting. I think that's great. And it looks like Sachin will be joining us, so that's very exciting. He'll give us a very unique look from a very smart investor on why he's a believer in SoFi stock. while we wait for him, I just want to add one more thing to the Robinhood story. This was Amit was sharing this. He said he was talking to a couple investors who were transferring money over to Robinhood from Charles Schwab, and Charles Schwab is willing to match the 1% transfer bonus just to stay on the platform. So very exciting. Today was the last day to take advantage of that 1% match, and Schwab is personally offering 1%. Keep it on the platform.
So wouldn't they do that for like anybody, like regardless of where that customer wants to leave? It's just a retention thing, no? Like I want to leave from Schwab and I want to go to TD Ameritrade. If I have a big enough account, wouldn't they just approach me and say, we're going to match it and just stay?
So we haven't been seeing, from what I've heard, I haven't seen it before, like going over to Robinhood. So that could potentially be the case where they're just paying for retention. But if this is a new thing, then that's really going to impact their margins.
Yeah, like I know that. I mean, I have 3 brokers that I work with, and every time I transfer money over, they make, me an offer to say, okay, well, this is how much money you're transferring. This is what we can offer you. We're also going to cover all your fees. We're going to do all of this and that. Like, it just seems like normal account management stuff to me, but I might be wrong. I think it's just, I think it's a stretch to say, like, and this could very well be the case, but I just think it's a stretch to jump, the steps to immediately associate it to Robinhood eating Schwab's lunch.
Yeah, we don't know like a lot of details. Like Amit said, this is just from 2 different sources. I find it credible, but one of the accounts was mentioned that it has over 500,000, so it could just be something massive. I'm just kind of curious if this evolves, but I have not heard at all of any brokerage in the past period giving a bonus for somebody staying on the platform. Usually the way the brokerages work is they just assume that you're already their customer. They'll keep you. So I just transferred from Webull to Robinhood, and it's a lot. It's lower than 500,000, but yeah, Webull offers a lot of bonuses coming in, but they do not offer anything at all to stay. And if you leave, then they're fine with it. So that's a normal thing with brokerages is they'll pay on the front end, usually not to retain you. I've heard a lot of people that are using Schwab are not really happy with the platform anyway. So I'm sure that this will keep some people on there just because, if it's already on there, instant 1% match, it's 12 months lockup time instead of the 24. It'll work, somewhat, but I can assure you that's not an expense that Schwab thought that they would have to be paying. So
I'm curious, just as an experiment, if you were, depending on the amount you have in whatever brokerage you're at, if you were to call your account manager and say, hey, not really happy, I'm looking to leave, is there anything you can do to, have me stay? Like, I know there's a brokerage up here, it's called Wealth Simple, and they basically have different tiers. And the most basic tier is you don't even get access to, any humans. It's just like robo-advisors, essentially, or the chatbots. And then the middle tier is like the premium clients. I think you have to have 200K or 500K, something like that, invested. And then there you get dedicated account managers, you get all these premium services. And they have partnerships with other businesses for I think one of them is insurance, health benefits. You can do a will for 20% off, whatever. But my point is if I have anything that I don't like, I can just call up the account managers and then talk to them about it. And they have helped me out on several instances to the point where I said, hey, I want this benefit, but in this other type of account that they weren't offering it, on their website. And they said, yeah, no problem. We can do that for you. We'll just make it custom, So my point is how much of this is people just taking it at face value and assuming that they won't get any help versus I can imagine if somebody has $1 million plus in a brokerage, the broker would be very cooperative to try to keep them on.
So I don't know, as far as trying to retain somebody, like reaching out. My experience with things like that is it never works. But I don't have $500,000 in my account that I was transferring over. So the context of this, Amit said that these individuals were personally called. They were in the middle of this transfer. Schwab called them and is like, hey, can we keep you if we give you the money instead? So probably they're not doing this for everybody. But if somebody's leaving that has a $500,000 account, it's like, yeah, let's go ahead and do that.
Yeah, that's high net worth, ultra high net worth. Those are the people they're calling and saying, hey, keep your business here. But if you are leaving Schwab for more than just, the quick payout, you want the extra features, cleaner UI, whatever, that might not be the only reason to stay. Or if they're giving you 1% up front or something like this, I mean, take your bag. Like, that's awesome. You're already using them. You already understand the feature. The money is not better in Schwab's pocket. It's better in yours. Take the deal.
Either way, I think it's a good thing, right? Because if regardless of how much Robinhood did or did not influence this decision, I think that we just need more information. More competition is good because the benefits are passed on to the end user. And for Schwab to be feeling like, oh, wait, we need to actually now match to retain, that's good for consumers at the end of the day.
So let's pivot the conversation, because we've been wanting to have this person on the channel for some time. They're now very free and available. We don't know how long we're going to have them for. But Sachin, how you doing, my friend?
Hey guys,
Hey.
Glad to be here. Sorry for the delay. Life has been a bit of just a bit strange for the last few months. My apologies for delay, but happy to be here to see with you.
No problems at all. No problems. Now's a better time than ever. So, SoFi has been a stock that we know that you have been holding. I think probably 6 months now, maybe a little less.
I think I entered a few times, then I exited, but I think since March or since late March, I'm holding it. I think for now, quite a sizable position now.
Got you. Okay. And as the stock has been falling, you said quite a sizable position. Are you buying on the way down?
No, I'm not buying on the way down because of two reasons. First, I deployed all my cash too early. Okay. And second, I mostly leave on my investments. That means if my money is invested, then the money I get from outside investment is just good enough to pay my bills.
Sure.
So I don't have an extra. I'm trying to move towards 100% investing income basis. So it is a constraint I have on myself. So yeah, I think, but I'm okay. I think I have to agree on this part that there are a couple of weaknesses in investing I have, which I did in most of my investing, and SoFi is not different. I get too excited and I jump too early, too big. Okay,
Sure.
I should have to learn better. Having said that once you do it, after your investment, your stock goes down. So that also pushes you to revalidate your thesis. You understand, okay, I mean, you are sitting taking a big L in terms of red for now. What is going to happen? And then that also creates some sort of an urgency. It happened in my case with Palantir also. So I try to look in deep. The first thing you always look is, can you get break even? Okay. And the second thing you look at is, forget you have an investment. If you have cash lying, would you invest in this company right now? Okay. So that gives you, this was what I call like a status quo thesis. That means should you stay invested in that or not? Okay. And so I did my own, due diligence. I mean, I have a separate thesis on fintech, which I have been carrying. I have a very large investment in private in a couple of companies, which is Klarna and SoFi, Solaris Bank. So yeah, I think this is something I'm extremely aware that what is going on. Of course, there are a lot of regulatory things and there are a lot of tech things. There are things which we discuss a lot on FinTwit, but in reality, in investing, sometimes don't matter. So having seen everything, I think I'm pretty comfortable holding it now. If going back, if I have to do it, I'll do my investment differently, because I did via Leap and stocks. I would probably have gone all stocks.
Sure.
Okay, because since the stock is holding here, So with leaps, you have some sort of time decay. I'm not concerned of that at this moment because the leaps are January 26 to 2026. But yeah, that was not very good risk management from my side. So yeah, I think that's I have to accept.
So you compared SoFi as an asymmetric opportunity similar to Robinhood and Palantir. What is the
Yes, I did.
what is the thesis here for SoFi versus well, not versus anything. What's getting you so interested in this company? What are the metrics that you're looking at that got you, to deploy such a large position so early?
So let's take a top-down approach first. Okay, so when we ran into the tightening of monetary conditions recently, okay, I mean, like if you go to 2021, every EV company was going to be Tesla, every fintech was going to be Square or Stripe or that. Okay, but
Sure.
we know that didn't happen. So roughly what happened is like so I saw like I mean I have some very early stage investments also. I saw that companies are struggling. So the question goes back, and I started doing this when I have position in Klarna that went from 46 billion to 6.5 billion. Okay, luckily I invested at 5.25. I wasn't right, but I lost all those profits. So I started looking, okay, what is happening and what will make it to run again. So I realized that first the whole fintech sector was overinflated. Okay, so that froth has to go. That was gone. Okay.
Mhm.
Then what happened is that whole fintech because of high interest rate is actually being beaten more than it should be. So that's a sector thesis. Okay. Then I started focusing, and this is where like a theme that there are certain companies which actually have got their act together, and they know that they cannot raise profit and they cannot invest on growth in such a way. So let's get cash flow positive. Okay. Then we say, okay, if the companies get cash flow positive, can they get gap positive also?
Mhm.
Okay. Then you see, okay, is the operating leverage improving? Okay. Then you start seeing, okay, does the product have certain features, okay, which is catering for a particular customer niche? Okay. Then you try to see that whether they are trying to expand in areas where normal financial services are not expanding. So you start putting these things together, and you see for everything. Okay, and then you see on the macro part. I think macro part everybody knows that rate cuts will come. The only thing is that the fear before rate cut comes will be maximum. So, and I followed like what they are doing. Okay, SoFi is not Palantir to be honest, but SoFi is SoFi. So I mean, you putting these things together, and I have a very detailed investing thesis on my pinned tweet. I mean, the question is what not to invest. The way I see, like, if we are, since like, if you see the institutional ownership, why institutional ownership is increasing? If you take it as a bank, then purely on price to book ratio, it is undervalued.
Mhm.
But then what about Galileo accounts? Few things I still see that kind of overinflated in SoFi. Like people say it is an AWS of fintech. And like
Mhm.
I said, I mean, a lot of companies claim AWS of this and AWS of that, which including Palantir. My idea is like, see, you cannot. It's easy to say AWS of this and that. It's tough to deliver. I appreciate the aspiration. When Palantir said they want to be AWS of enterprise, I appreciate it, but I want to see it happening also, which in some ways happening. So when AWS says it, I like the aspiration, and the reason for that is 3 years back, I was leading a digital strategy for a very large company, 64 billion market cap, and they said me, "You decide what the aspiration look like." So I created, and I thought, okay, I have to put a name to it. So I created a name, and I said it is going to be Project Wiser. And they asked me, "What wise? Why Wiser?" I said, "I want to build something which can outlive us." Okay, so that is when you say about AWS. AWS means delivering 30-40% growth year on
Mhm.
year, quarter on quarter. I mean, big daddy gains. Okay, so has SoFi poised for it at this point? Probably, but they need to show more evidence. Are they profitable company? Yes. Are they going to be more profitable? Yes. Are their operating leverage increasing? Yes. Are their debt decreasing? Yes. Is having debt on personal loan is risky? Yes. But as the rate goes down, that riskiness will also. So things in market. See, and this is why I say I never believed in like the fair value pricing, because there is no fair value pricing. If you are fearful, you discount too much, and if you are optimistic, you don't discount at all. Okay, if a
Mhm.
market says the fair value prices, analyst goes on channels and this is the fair value pricing. This is all bullshit. There is no way of stock can be at its fair value pricing, because people are either greedy or people are either fearful. Okay, so when you put these things together and you see, okay, what will happen? And I mean, I use technicals in a very limited way because most of my investing is based on fundamentals. But you see the zone in which it is, the company performance is improving. Every time company has gone below this level, okay, the performance was poor when it was 4 and 5. The performance was, there were more uncertainties. There were short reports on the companies. Okay, I recently saw this interview that there is this guy. He was talking to another YouTuber. Both were bearish on SoFi, and they said the fair value pricing is $4 because they are doing some sort of accounting fraud. I said,
Yeah.
okay, if you are doing accounting fraud, then why $4? Why not $2? And if you are saying that this company is doing accounting fraud, please show some evidence.
Right.
Okay, I'm up to. I mean, I know companies do accounting fraud. Okay, and I mean, I was there when Nicola was running 34 billion, and when the report came in, and it was established that they were doing freaky things, and there were analysts sitting on Bloomberg, and they said basically Nicola is a business model company, not a technology company. So people can say all kind of bullshit. Okay, you need to take a step back. Okay, so I'm putting things together, and I see that okay, there is a fair chance in my books that of course I'm holding the position, so it's painful, but that it can get to anywhere between 9 to 10 by the year end. Okay, there is a fair chance it can go to 12 to 14 before my leaves expire. So I say okay, let's hold it. That's my view. I mean, I could be wrong, but that's my broad thesis are.
So I know that some of this is a trade for you. Is this all a trade for you, or are you looking at some long term too, or where are you at with that?
So it's not all for trade for me. I think leaps are a portion which is trade for me. Okay. See, if you see, like, I always hear what a company wants to do. So they are saying they want to be AWS or fintech. Okay. I want evidence, but I'm not neglecting it. They said they want to be among the top 10 banks or within US. And I'll tell you that is more difficult than becoming AWS or fintech. Okay. Banking industry is like mafia. Okay. You really have to topple a big guy before you enter into that league. But I like the aspiration. Okay, you may not become top 10, you become top 25. Even that is a good thesis.
Oh yeah.
You may go international. Okay, see, the only reason in fintech, fintech, I have discussed this a lot. Fintech is about user experience and user comfort. Okay, so I'll give you an example. So yesterday I was using Grab. Everybody knows Grab is a stock listed. A lot of people talk in fintech also. It's an equivalent of Uber and fintech in Southeast Asia. So yesterday I made a transaction of from Grab around $25. I was on a shop. I made the transaction. The merchant didn't get the money. Okay, and it was not showing in my activities, though the money was deducted. So I had to make another. So I made up 2 transactions. Okay, and then still the same thing happened. Okay, and now the problem is that I had to now for $25-50 I have to reach Grab support. He has to reach his own support. Okay, and then after like 6 hours they said okay, a transaction happened, but the money has to be returned from him. And the guy says, I said, oh, I'm not going to waste my time for $50 on all of this. What I'm gonna do is I'm not going to use Grab fintech for payment purposes. End of story for me. Okay, anybody who asks me, I'll say, okay, I'm not going to use. There are other e-wallets I'm going to use. So this is very important. In fintech, the moat is created from regulatory and the user experience perspective. If anybody says that we are going to create moat in fintech because we have a technology that nobody has, then people are bullshitting.
Mhm.
Okay, how you put and the vertical integration and how you put, so user experience is very important. Okay, there are, I have heard both good and bad about SoFi, but overall, like when I see and I see, okay, yes, I mean, it may not be the best product, but it's a good product for a at least a specific portion of the, because I deal with banks, I deal with traders, and I deal with brokers. I know how shitty things are. Okay, so and tomorrow, like for example, if everything goes well, tomorrow say SoFi decide, okay, why don't we buy a bank in Europe, a small company with a banking license in Europe, like Klarna did,
Mhm.
then they can immediately scale. Because if you want to be AWS of fintech, then you are not going to stay in US alone. So there is a there is a very large wild upside, but in order to see that, there has to be evidence moving forward. Okay, like for example, in when I was going for buy now pay later, and everybody said scam and all that, I said like, the reason I went with Klarna, because first, they are pure play company, they are pure
Yeah.
buy now pay later. Second is they were profitable in first 15 years of their existence. So that means the company understand the capital discipline, they got the banking license. Okay, it is not easy for a US company in fintech to enter in Europe, I can tell you right now. So Klarna is available in Europe, Klarna is available in US. It's not easy. Then they started investing on their growth, which they went overboard like everybody else did during that time. Okay, they immediately scaled back and they start focus. So their focus is on profitability. Okay, so I know, okay, I may not make a lot of money. I know that, okay, this is a sizable company, this is a reasonable company, and I understand their moat that exist. Okay, but BNPL is still a wild industry. There are a lot of issues that are happening. Okay, at the end of the day, they are creating more value for user. Okay, if you are creating more value for users, I know young generation, as much I know, they prefer using debit card and BNPL over credit cards.
Sure.
Okay, so same thing in the fintech, the value is created in a very different way. So when I see SoFi in terms of performance, it's improving. When I see SoFi in terms of valuation metric, and it doesn't matter what metric I take banking, I take fintech, uh, it is cheaper relative to peers. When I see fintech as a sector, I think overall fintech sector is beaten more than it should be. Okay, when I see macro, I see there is a sizable chance that rate cuts are coming. Okay, when I see the management, I see the management is decent. I think they are trying to, they have, like, if you see like last 6 earnings, you can see they said they will do this and they did it. Okay, you have to be consistent, and that's what they are doing it. So it meets most of the criteria for a decent investment as well as a decent trade at this. So that's pretty much, I thought, okay. And you know, I mean, I have to sleep when the US markets are open, so I really need to have a sound thesis about a company when the market is my position isn't right. So back to you guys.
So, Sachin, SoFi obviously checks a lot of boxes for you. Where is it missing? What are the problems that are, it's not quite living up to what you had hoped for it to be either a company that continues to outperform or, certain check boxes that you look for a disruptive company, for a company that deserves a premium. Where is it missing the ball or dropping the ball?
So first thing is, I think the way management communicates it, it's very conservative.
Sure.
Okay, the way they talk sometime in the earnings and all that. I mean, earnings weren't bad. The guidance weren't bad.
It's almost a
Okay,
disservice
but
to themselves.
yeah. So the thing is, I mean, I agree. There is nothing wrong to being humble, but when you are sandbagging a lot, and when you are, I mean, we feel that, see, if you are playing with too much protection, my view is you're not playing at all. If you are so fearful, companies are built. Great companies are built with assurance, bravado, and challenge. SoFi is completely missing that part. Okay, everybody was making joke of AWS, everybody was making joke of Amazon, everybody, and we will say, people say, oh, explain to me. And Jeff Bezos was explaining and people were not understanding. And Jeff Bezos, I remember, there was an interview in 2001 and 2, and he comes and he says, we will sell you in low margin than anybody else, We will sell you faster, and we will still make more money than everybody else. And the guy was confused because he was looking from unit economics perspective. He wasn't looking from cash cycle perspective. Okay, when Dell was coming, everybody was saying, okay, what Dell is doing? They are doing the same thing what IBM is. Yes, Dell was doing the same thing, but Dell was charging you before they were shipping the product. So they were a negative working capital company. Okay, so the thing is, when you build great companies, and you can see even the turnaround in Palantir, I think Palantir, like I criticized a lot of time, they were sandbagging a lot. The moment that bravado and assurance and those things started coming in, there's a lot of people who start, yeah, I like this company. Okay, so if SoFi has to first believe in themselves that they are going to be the AWS of fintech, that they are going to be the top 10 banks, and then start acting accordingly. Okay, because if you want to be the top 10 bank of America, you will give me guidance of 50 years. You will not give me guidance of 5 years. This is where we want to be in 10 years. This is where we are going to be in 25 years. We understand it's a broad direction. And a lot of things will change and things will happen in a very different way. And they say we cannot do that. If you cannot do that, you also cannot say you are going to be the 10. I mean, then it's just a statement. Okay, so that is one thing, the communication part. See, if you beat earnings and your stock is shitting continuously into earnings, something is wrong. Management has to take responsibility of that part, and that's a part of communication.
Mm-hmm.
Okay, the second part, which is, see, like I said, the whole fintech sector is trouncing. Okay, so there is a bit of education that you need to provide your customers, your investors, and institutional investors, that there is an undervalue valuation theme that is running across fintech. There is never a single statement has been made on that part.
Yeah,
When somebody says your stock is there, somebody says your stock is bad, they start explaining, but the stock is not dropping just because of SoFi. The stock is dropping because there is a market sentiment. The stock is dropping because there is a sector sentiment. So they have to explain that also, that we are not the only one doing. I mean, you see a PayPal, anyone who has done value investing knows that it's a easy way to, it's a sure shot play to invest. Okay, and PayPal has a lot of cash. They are not even in a situation like SoFi, and they are barely able to defend positions like $66, $67 on that stock. Okay, so I think that when you see the performance, when you listen to the management, and when you see the stock, there are three different stories.
I think that there's some people will compare certain SoFi competitors to value appreciation, but not really compare it in a fintech perspective. But some of the competitors that have ran are actually crypto plays. You know, Coinbase, Robinhood, they're running for separate reasons, in my opinion. But yeah, I do agree, and people don't talk about it enough. Fintech as a sector is in a drought right now. They're definitely not getting the premium nearly as much as what they were back in 2021, stuff like this. So
on that note, then, with regards to SoFi specifically, Sachin, what do you think is the catalyst that will cause the turnaround in the stock? Is it mostly the fact that, hey, we just need more earnings where they're beating expectations and eventually it's going to go up, or is it some macro reason with regards to rates?
Yeah, rates.
The answer of that is very boring, but that's the answer. So let me clarify on that part. See, first thing is, SoFi is following a long-term strategy, so they cannot suddenly make things change. They have to follow it. There is a regulatory environment, so that is fine. I mean, they need to do. Thing is that in this particular thing, yes, macro changes will definitely improve it. There is no doubt about it. Tomorrow, Fed chair goes and say, yes, we are looking for rate cuts. Yeah, it will happen. I mean, see, you try to look in your own life and see, are you using more fintech or not? I mean, go to India, go to Southeast Asia. I mean, like I was telling you about this story about Grab. I will not stop using e-wallets. I will just change my e-wallet. Okay, so the thing is, like, fintech as a sector is going to expand. So there is a macro thing.
Yeah.
Okay, fintech as a sector is under strain because of rate cuts. We already know what is going to happen with rate. At least we know rate cuts are not increasing. Okay, and with these rate cuts and these high rates, SoFi has improved their performance. Rates have been holding now for almost a year, and within that year, SoFi has improved performance. It may not be as attractive as you want, but performance has improved. So rates will go down. Suddenly, you unleash, and you already have seen that because of the nature of the company has given a very conservative guidance. Okay, the thing is, like you said, Travis, I mean, yeah, they need to deliver more in terms of earnings and performance, because uh, like I said, in fintech, you do not have like a technology mode. You may have features mode, but you do not have a kind of a technology mode. Okay, so that means you need to squeeze more from what you have. So yeah, squeeze more from what you have, be more open, where do you want to take the company, and let the macro do its own role. I mean, eventually everything, see, any bubble or any bear market, in the bear market, the biotax, the fintechs, the growth tech which doesn't have free cash flow, they get beaten to death. Okay, and when the bubble happens, so from the bottom of the bear market to the top of the bubble is like Easter reviving. Then these things will go, and not only they will go up, they will go to a valuation which cannot be sustained in any way. Like we see, it's a cycle that I have seen so many times, and this cycle will no longer be different.
I think
Okay,
people
so yeah,
forget
you can
that.
be, yeah, you can be wrong on a lot of things, but this is going to happen. Okay,
Yeah.
the question is, and like I said in my case, that's what I say, I should have invested in the stocks versus leaps, because now I have to deal with the theta decay. So I have a window in which it should it should recover. So that's my mistake, that's not market mistake. Okay, but yeah, I mean, it should that's how I think about it. So if a fintech develops something which nobody else has, okay, they can never build a product around it, because everybody else will make a lobby and the regulators will stop it. Okay, this is what was happening in 99 when companies like PayPal was actually coming in, because banks get scared. Oh, what the heck is happening?
Yeah.
If you read, I mean, everybody knows PayPal's success, but people forget the struggle Peter Thiel and Elon Musk was happening before the merger, and why they merge and why they got to deal with eBay and all that. Now, so the thing is, like, if you make something which is extremely good, okay, then the thing is, banks will say, and everybody say, oh, we don't have it. We need to wake up our friends in Feds and banking sector and Yellen and all that, and let's make a stop on that. Which has happened. Like, for example, you see the BNPL. When the BNPL happened, everybody kind of making joke of that. But then it became an industry. Then suddenly everybody said, oh shit, we need to do something. Oh, we need to wake up some politicians to make some statements about BNPL. And you see, there were politicians who, as paid by their donors and everything, they made a statement. Did anything happen? Did anybody change anything? No. But that's what happens. So that's why it is very difficult to build a technology mode in fintech. You can build a technology mode in fintech if you are a service company. So, for example, if you are a Palantir and you have a suit which is doing Palantir for crypto, okay, now it is looking the transaction side and the potentially validation side, verification, compliance, and all that. Yes, you can do that, but Palantir is offering it as a service. They're not charging too much for that because they have to sell it to everyone else. Okay, so that's where, I mean, like, fintech is a bit different. Now, if tomorrow SoFi really become AWS of fintech, that means anybody who want to build a fintech just build a suit and they say, okay, why don't I buy tax stack like you are buying Palantir stack? Okay, so for example, like a company I invested in Europe that is called Solaris Bank. I invested because their idea was a fintech as a service, a banking as a service. That means if tomorrow I decide I want to issue a credit card and I don't have any regulatory, I will just go and buy a license from Solaris Bank. And then I can issue as many credit cards I want in Europe, and I want to open bank accounts and all that because they are providing me as a service. Unfortunately for me, okay, I like the company a lot. Their execution is not as good as SoFi. Their mode is they are in Europe. And with no disrespect for hardworking people of Europe, but guys, you need to do better when it comes for innovation. You cannot just rely on your boundaries of European Union and the regulatory and compliance things and all that. I mean,
Sure.
innovation needs more raw action. So that is, but when you see US, yeah, SoFi is in middle of that raw action. Okay, so I mean, yeah, I mean, I like the company. Okay, I think this company has a reason. So, what when I say asymmetric, it's very simple. Asymmetric is the low. What is the SoFi low? SoFi low is 4.24. At that particular time, that was the peak of terror. The company wasn't profitable. There was no, the rate cuts were still increasing. We didn't know when the rate cuts will stop. There were short reports. Okay, if so, it's fair to say that we will not see 4.24 again. Okay, so you can say, okay, we don't see 4.24, and if you see those years, it was like blip to that, and then it comes back to like this 5.5 range. So at this level, there is a 5.5 range, and if everything works out, you are looking anywhere between 9 to 15. So it's an asymmetric deal. There is no, an asymmetric deal doesn't mean that you will make money on it. A symmetric deal means that you will lose less money on it versus the opportunity of making more money. So if I can lose $1, there's a chance that I can make $6 to $7 on it.
Right.
And as somebody who's managing a portfolio, has to create several asymmetric deal if possible, and this is how you do it. Okay, so yeah, it is an asymmetric investment opportunity, and anybody thinks it is not, good luck with that.
I think you're absolutely correct. I think some people get a little bit too into the weeds of comparing it to the wrong companies, old institutions, and not seeing any of the innovation that SoFi is bringing, or at least very modern solutions that SoFi is bringing. But one thing you said that I really want to touch on is maybe some lack of SoFi management confidence or execution in some of their goals or communication with investors. Do you think that Anthony Noto specifically as a CEO has what it takes to be an Alex Karp or a Jeff Bezos, as you said, or a Michael Dell, or any of these other names that you also brought up?
See, Anthony Noto is a very good CEO. Okay, I'm actually impressed by him a lot of time. Okay, but when you talk about the names you mentioned, like Jeff Bezos or Alex Karp, okay, they make some very brave statements. They make some very outrageous claim. So on that metric, Anthony Noto hasn't made any outrageous claim.
Top 10 financial institution?
Not
AWS
that.
fintech?
No, this is what I said. Outrageous claim versus making a statement are different. Okay. So for example, if Alex Karp comes, and Alex Karp, like you remember when the bear cave thesis came on Palantir. Okay, Alex Karp the very same evening was sitting with Ed Ludlow on Bloomberg, and they asked about what about that. Say bear caves can go in bear cave. If you have any doubt about Palantir, why don't you talk to the people who are on the front line of Ukraine? So making a statement is different. Making an outrageous claim is very different. Okay, we live in a world of media where things are so muddled that we sometimes don't differentiate it. He said, okay, you don't think we are doing it. So he said that we are making a claim that we have stopped like 9/11 attacks on US soil and European soil. Go ask people. If you feel that we have not done it, people can go and deny. Na? Intelligence community and government can say, na, yeah, they are not in that. Oh yeah, we use Palantir, but they are saying this, but that's not right. So we will not use them. So Anthony Noto has set up a goalpost, but he has not made any outrageous claim. Okay.
I think that's
like for
fair.
example, like another thing is, like for example, Sham at one point of time he said that we want to be the AWS of enterprise. Okay, everybody got excited. Okay, AWS enterprise, Palantir is going to 1 trillion, blah blah blah. Guys, let's go back. What does it mean for AWS for enterprise? So you need to understand AWS. You need to go back in 2003, 2004. Jeff Bezos wanted company to scale in a certain way, and he realized that the current digital infrastructure is not allowing me. And that's how AWS originated. And that's how they started becoming a product. When AWS started becoming a product, before that, Amazon was not considered a technology company. It was considered an e-commerce company. I was there. When you go and check the peers and multiples, it used to get peers like eBay, and you will see all these funny things out there. Okay, then what happened in 2007 when they say yeah, and then the drop box started. Then they say, oh, it is going to be a commodity business. Okay, and it was a commodity business, but that's where he started scaling fast features and business model. So business model was coming with tag, and that's what the vertical integration was coming in. And what was missing, they were trying to fill it with their customer service and sales teams. And that's how AWS was constituted. But then something else happened. So in 2008, everybody was thinking that AWS is running an experiment which will validate a test case for Google, and then Google will come and sweep everything.
Mm-hmm.
And Google launched their cloud in 2008. And what happened? Where is Google today? Because it was not technology alone. Enterprise works differently. So you needed customer service. And Google doesn't understand enterprise sales. Period. The worst technology company in enterprise sales. I have used their product. I was there. I was in the company where we kicked Google out of it. And they had the best product in the market. Can you imagine? A $10 trillion industry, you have the best product and you don't know how to sell it. So what was happening with AWS? So AWS was catering market. They were catering customers. There are companies which only started because of AWS.
Mm-hmm.
Netflix exists because of AWS. Because the model of streaming cannot exist without cloud. Okay. Google Cloud is the best cloud in the market, period. Google sales team is the worst team across the hyperscalers, period. I mean, think about Microsoft started in their cloud later, and you know their cloud actually started when Satya Nadella came. Their cloud is not as good, in my opinion. Okay. They have improved a lot. I have to give that credit to them. Okay. They are exactly following what AWS has done. Fill the service. But the customer service and customer relationship Microsoft has, it's amazing. In enterprise, you're not buying, if I'm buying TV, I'm buying TV for my home. Okay. If I'm buying TV for my office, my metrics are different.
Sure.
Okay. So then what happens is, so when you talk about company like AWS, so what makes AWS? That means there are business models, there are companies that only exist because AWS exists, like Netflix. So when you see, like, is Palantir doing that? Yes, Palantir has started doing that now. You see a company like Endural. Endural is the only hardware, software integrated defense play. There is none else. Every other defense company does software as an afterthought. Endural, Bummer Lucky thinks this is a software. They design their products exactly like Tesla is designed. Why it is able to do it? It is able to do it because of Palantir. So in the enterprise sector, Palantir has shown its first evidence that you can create an entire business model and entire company just because we exist.
Do you think
like take the case of Airbus. I mean, Airbus provide this service, okay, because Palantir exists. So that is the thing. So when SoFi says we want to be AWS of fintech, at some point, it doesn't mean you're just selling technology stack. Technology stack is commodity. You have to put technology stack, customer services, I mean, everything together with that gist of chasing people and relationship and everything, that you start building things that people start building on top of SoFi, which would not have existed if SoFi hasn't been there. And that hasn't happened. So SoFi, yes, it's a fintech company. They are selling a technology solution. Their technology solution may be very good, but they haven't yet created an Endural. They haven't yet created a Netflix. So that is where Anthony Noto actually has to go and see, okay, this is how we will become AWS of fintech. We will not become AWS of fintech because selling tech stacks. We will become AWS of fintech when we are the part of the DNA of a business model, when we are the part of the DNA of a company. Okay, so that's what I said. I mean, I love the ambition, but I do not see the evidence of it yet. And you cannot claim it to be an AWS or fintech just by selling tech stack. You need to build businesses. You need to show that, and that SoFi has to demonstrate. If SoFi can demonstrate that part, okay. You see, there are so many seed investing model. There is Antler, there is Y Combinator. What they do, their idea is get an idea how to scale it fast. Agree? So how do you scale fast? You scale fast by using readily available things. Okay, we talk about AIPs and all. We say, okay, why don't you use it? You can go to product to revenue in 6 weeks, and people get stunned. So that is something, that's a magic they need to create. If are they doing that kind of aggressive customer engagement, product engagement with their tech division at this point? No, they are not doing it. They have a division. You can take their product, you can build things on it, we can grant you license, but they are not in bad with their customers. Okay, so yeah, I mean, you really need to go deep.
I mean, that whole AWS of fintech, and I think just as a concept, I understand what you're saying, but in terms of the practical aspect of SoFi becoming that, there seems to be, first of all, the time horizon is much longer than I think anybody watching this would realistically expect. I mean, we on this channel have even talked about, okay, well, when SoFi is going to start to land some big names of people leveraging Galileo, but what you're talking about is something more instrumental than that. And so that's going to take a much longer time horizon. And then secondly, is that it's going to have way more execution risk baked in to say, okay, well, if my asymmetric reward risk to return for investing in SoFi is the AWS of fintech, well, what is the confidence that they can achieve that and in what time? You can say, okay, well, they can become that in 10 years, let's say, and I would assign, I don't know, 50-50, maybe 30% that they can actually achieve it with good execution in that time. And so you get to this point where you can have a very high multiple expansion from where we are right now, but there's also a lot of unknowns that we're baking into that equation.
So your question has 3 parts. So let me answer in first part. Okay, the first part is, I mean, like, let's come to multiple expansion later. Like, first, like how to do it. And you also said that it is risky. It's not risky. If it is risky based on how you do it. Okay, you can build a go-to-market strategy which can be almost risk-free to expand it. Okay, and that's where the business genius comes. Okay, so can you have a tag, and everybody knows that the expansion or selling more, the margins on tag is, so the thing is, you need to have a right venue. But first, before that, what is needed, that we need to commit ourselves that we are going to help build companies and business models that don't exist today, which they are not doing. So that is part 1. Okay, because they think it's safe. The second part, and as you rightly said, because somebody embarking on this journey could expand that I might burn cash. So the question is, you don't want to burn cash, but you want this thing. So ask how you can do it without burning cash. Can it be done? Yes, it can be done. Okay, there are so many fintech startups starting. There is so many investors who are burning money in those fintech startups. Okay, you are sitting near to close to Silicon Valley. There are so many startups incubators. Why don't you work with them? I mean, you have to do something now. You just can't wait till somebody wants it. It's not, you cannot be like a digital turbine. Now you have to be digital ocean. Digital turbine is sitting back, or somebody will come and build things with us. You see what is happening. They are sitting in the hottest sector and they are dumping like anybody else. Okay, so the point is, like, yes, the third part is a multiple expansion. Yes, multiple expansion will happen. Okay, and multiple expansion, the moment, like I said, the market realize SoFi is doing it, multiple expansion will happen beyond what it should be. Okay, so for example, you remember, like, there was a time when Palantir started this program, Foundry for Startups. Okay, I mean, the idea was good, but what was Foundry for Startups? Foundry for Startups was a program which was allowing company to build their whole models around it. The success and the timing of that program was not as expected, but the lessons they learned from it, these are the exact lessons they went into AIP. So yes, you will pivot, there will be some risk, but if you want to see why people will pay premium for SoFi, there are only 3 reasons people will pay premiums for SoFi. Financials, that means financials are improving, they are better, which is happening. Then you talk about future, that means where the future is going. They say we are going to be AWS of fintech. You cannot be AWS for fintech without building businesses and companies. So what are you doing in that regard? Oh, we have a technology stack. It's a good technology stack. Yes, you have a good technology stack, so what? Okay, the question I ask, so what, is the most important question in strategy consulting. That is, we ask, or a senior executive asks us. Okay, the third is they are saying we want to be the top 10 banks. Okay, how? Okay, so how is that? Okay, today we are 75, then tomorrow, next quarter we are 70. We saw that that thing has also had a plateau. Okay, so you want multiples, you can get multiples, like you said, Tevis, earlier, by squeezing more from what you have, or by building new avenues. Which new avenue is the fintech? Everybody, and even I celebrate when they say, oh, Galileo accounts are increasing and all that. But we are not hearing somebody coming and we say, okay, I exist because of Galileo. If people are not existing because of Galileo, I'm sorry, you are not AWS or fintech. You are a good tech company, you are a good fintech company, you have a good product, but you are not AWS. They did not say we want to be a fintech company, we want to be a top. They said we want to be AWS for fintech. Then Anthony Noto has to play the game accordingly. That
I think personally, the roadmap of what you're saying is playing out. We are just so zoomed in right now that it looks like nothing's getting done. But we need to zoom out and realize that, one, so they acquired, Galileo Technisys. We're starting to build out more reasons why Galileo itself can be a one-stop shop for businesses to be built there exclusively. But two, here, I just want to show you a quick image, and then I have another point to make really quick. I just brought this up. This is QED's fintech report for 2024.
This is a BCG analysis. This is my company.
That's awesome.
This is where I spent most of my career. No, it's okay. It's okay. I like to see, and I'm happy to see that you are using BCG reports.
I look at them every year, so I'm actually going to do a video on this later because we've been reading through it. But fintech funding is absolutely, destroyed right now. So, I feel like it's hard to see a ton of growth at the 30-40% if their future pipeline is just completely dried up. So I don't think there's a ton of funding in fintech right now. I think it's gone, and the funding is for companies that Galileo has already gotten. Like not Klarna, for example, like you had said, but I think they're with Marqeta. But on another thing, like we just saw recently, they partnered with a company called, what was it? Top Finance. Someone help me out here. They partnered to actually issue the cards themselves. So that's another step in the chain that Galileo has never done before. Soon, I think they're going to take deposits for those members as well. And then I do believe you will see fintechs built right on Galileo. Deposits, issuing cards, doing the actual card programs, and doing the banking infrastructure on the back end. I can't think of another company in the world that has that capability.
So you're right. I mean, that's what I said. I mean, but thing is it sustainable mode? If tomorrow somebody wants to do with right lessons and right capital, you can do it.
If you have a bank charter.
So that's the thing. I mean, so that's what I said. It's a more and that's why the space, the customer service, it becomes very important. Okay, and that is why that's what I said. I mean, like what SoFi is doing many things right, and you don't have to take my word for it. You take their financial reports for it.
Right.
Anybody who is doing and the financial reports of their peers, financial reports of fintech lending and fintech money raising has dried up. So fintechs I am in, a lot of time I hear, okay, we need to do a bridge round because regulator have increased the requirements of cash ratio. Okay, and then they go and they say, okay, we need to raise this much capital. That was a raising capital in fintech right now is an extreme pain, and that is where the valuations are suppressed. Okay, so SoFi is suffering because of that, because as a public company they have limited ways to raise money, and their money raising also scrutinized much strictly than a private company. So that is a hangover on fintech, and that is a hangover of SoFi, and this hangover will go away. And if you ask me, just if I have to take that hangover out today at this moment, SoFi went from 9 to 10 just because of that, even before the next earning. That is how strong that hangover is.
Yeah.
Okay, so there is a macro reason just which is trouncing it. Okay, and I'm not talking about improving performance. I'm not talking about AWS or fintech or banking. That's what I said. Now you start putting on top of that, you already have a product. Okay, how to make this product? See, people are buying the product, but we don't know what they are doing with that product as much. We know, yes, this bank is using Galileo, Citibank is using that. But will Citibank stop working if Galileo is not there? Okay.
I mean, no.
Yeah. So the thing is, so yeah, I mean, it's a good product. So you can say we are CRM of fintech. That's makes sense. Salesforce, I mean, they are essential cog, but you cannot say we are AWS of fintech. There is a difference between both two things.
I wouldn't mind CRM of fintech either, though.
I won't mind either. I won't mind either. But I'm saying, like, when you make a statement, that's what I said. Making an outrageous claim and a statement are two different things.
Yeah. Okay.
Okay. If tomorrow Anthony Noto goes on next and they say that in next 3 years, 10 companies of $1 billion valuation will exist because of Galileo, that is a claim. Because he has said something, because he has to back it up with something.
Yeah.
Okay. A statement, you do not, I mean, you can say whatever you want. Okay. So I'm not saying they cannot do it. Okay. I'm saying what is being said and how conservatively the management approaches. Management reminds you of a bank. It doesn't remind you of a fintech.
Right.
When you listen like how Anthony Noto is carrying himself or how their team is carrying himself, that reminds me of a bank while they are a fintech. Can you remember like people of Stripe CEO coming and speaking like Anthony Noto? No, it will not happen.
I think one thing I've been thinking about, I've spent a lot of time the last 2.5, 3 weeks digging into Galileo. Derek White, there's a lot more content. You know, he had an interview, and that kind of pushed that out for me. It's like it'd been a while since I looked at that. And, you know, as an acquisition for SoFi, but they kind of treat it like a separate company. He's still the CEO of Galileo. And I think there's a few things that they need to do. They need to utilize him a lot more. And I think he needs to be there during the earnings call and just have a little quick blurb or something on the tech side instead of, I think you're absolutely right, Sachin, that the way that the earnings calls portray themselves is primarily this is a bank, not a tech company. And you actually look at what Galileo is doing. I've looked at a lot of other similar platforms as Galileo, and the range of offerings. I'm not able to use them, but I'm able to look at the range of offerings. I'm looking at the way that they actually talk about fintech as a whole, the services that they offer, the type of clients that they have, and that they're also seeking. It's very, very impressive. And I don't know enough about, you know, banking as a service and the other offerings that Galileo is doing to know if it's really best in class. It seems like it is. Now, one of the other problems that they have beyond the communication, and they just need to use Derek White. Like, just throw him out there. He's great. Oh man, I'm blanking on it. I had it just a second ago. Not enough caffeine. Sorry, guys.
No worries. See, guys, I have talked to people using Galileo. Okay. I have talked to companies using Galileo. Okay, and
If any of the employees
they
are
are
watching, by the way, we'll take a demo.
Yes.
show us the ropes.
so,
Yes.
and they said it's a very decent product. They are happy with it. That was their words.
Okay.
And that's good enough for me to know. Okay, I mean, but yeah, I mean, like, that's what I said. It's a like I said, I mean, it's a CRM. You talk about CRM. Yes, you can be CRM of fintech.
Yeah.
Okay, and that's how I said. I mean, like, I see a company which is cash flow and gap positive. They have reduced their debts. They are undervalued in terms of banking metrics. They are undervalued in terms of fintech and growth metric. They are living in an environment where valuations are suppressed because of fintech ability to raise cash, while this company has limited need to raise cash. We see an environment where rate cuts are going to be cut. We see an environment where, because this company is not like a total bank and it's not like a total uh, fintech in a way, so people are confused like how to value it. You do either this or that because it's easier to do that. That's how the valuation works. You always take the lowest metric. So this company, in my opinion, and I could be wrong, is undervalued in as many aspects as possible. Even if the rate cuts start and they deliver what they have said, that alone is good enough to take this stock, in my opinion, without any financial advice, beyond 10 by the end of year.
Yeah.
Okay, and like, if everything else start kicking in, yeah, there is a huge upside.
Yeah,
I
but
mean,
I
like,
don't,
you see the guy has taken their stock options at $25 valuation. Like, if the stock reach only $25 only, then I get paid. Why somebody would do that?
That's
so
at the start, by the way.
the
25 to
problem
45.
is the problem is Sachin, that at some point for the valuation to climb, the narrative has to change for this to be viewed as a hybrid or even as a tech company on like the more bullish side of things. I love Derek White just as much as anybody else. I think he's the most technologically savvy in terms of how he thinks about it. But you said it yourself a little earlier. Everybody views SoFi as a bank. SoFi's executives are more viewed as bank executives versus fintech executives. And that's how the market is going to treat them as well. Like, what they telegraph to the market is how the market is going to treat them from a valuation perspective. If technology platform comes in and does 50% of their revenue magically, then yeah, we can talk about the narrative change. But until that happens, it's going to be really difficult for this thing to climb over 10 or climb to 20 or whatever you want to call that milestone on the back of Galileo alone, because the narrative has to completely shift before that in order for that to happen.
And the other piece that I was lacking before is that they have a very long sell cycle for the old legacy banks. And when I first became an investor in SoFi, it was like, oh, it's lengthy, but I didn't understand how lengthy. And I think maybe it's got even lengthier in the current environment. And so I think part of what needs to just happen is, if they land one of these massive legacy banks, then people will actually start believing them when they actually say that we have all these that are in the pipeline, that they have to go through this process. It's lengthy, but they will land some of them. At that point, as long as they communicate well and clearly, people will realize, okay, yeah, this isn't just a bank. But they have to see that the proof is in the pudding. And Sachin, I appreciate all your Palantir references. You may know this or not, but Palantir is a irresponsibly large amount of my portfolio. Number one holding, above and beyond everything else in my portfolio combined. So, but I liken it to what Palantir was doing as far as our sell cycle prior to AIP. It was very lengthy. It was expensive as far as time, also money as well. Wasn't always the most effective. I don't know that there's a way to do this, but it would be great if something like AIP came along that helped accelerate the rate of adoption. Old legacy banks, maybe not. They're going to move their own pace. But with some of the other smaller players, we'll just have to see if that plays out or not.
So, guys, you guys are very polite and very, very like sincere when you say about, like, okay, in terms of, let me help you out here. See, if SoFi is running some sort of accounting fraud, or there is something which is out there, and tomorrow the stock goes on 4 and we lose a bunch of money, yeah, I mean, we should deserve all all the hate in the world and all the criticism, we deserve it. I take that part. Okay. If that is not the case, and the case is what we have established, and people say, oh, I still don't buy that narrative, then those people do not earn to make any money in SoFi stock. That is also true. If you need, so people investing are like this, that if Moses will come and give them 10 commandments and that this is how you should live life, they will say, oh no, I am looking for 15 commandments. That is how people treat investing. I mean, how else you would evaluate an opportunity, and then on one hand you say, oh, we need an opportunity, we are on a disadvantage on Wall Street. I mean, at least use what you have. Where you want to invest? You want to invest in a good company. What is a good company? A good company that is improving in terms of performance, that is growing. What is a good investment in a good company? That if this company is misunderstood and not fairly valued, and the macro, because of macro, it is understand investment. That is what SoFi is. Okay. And if somebody is saying that I don't buy the narrative, yeah, don't buy. I'm not saying you to buy the narrative.
Yeah.
Okay. It's your situation. You have to go and buy the narrative. I mean, I would love if you buy the narrative. Okay. We have seen with many companies. Okay. But guys, we do not have any sympathy who don't buy the narrative. That's my message to you. And do not have sympathy for ourselves if we are wrong, because that's how investing is. It is harsh. It is ruthless. If people do not buy the narrative, they do not have courage to invest in companies. They sort out and they do. And we know that 99% investors are like that. Every study, every cycle, that is the reality. Only few people make money. Rest is okay. I have been in the 99% on the cycles before. I am hoping I'm not in the 99% this time, but who knows?
Right.
Okay. The reality is it a good company? Ask yourself, is the company performance improving? Okay. How do you want to value it? Based on metric, based on earning multiples, based on price to book. Okay. Do you think there is a fintech angle? Do you think what is happening in terms of rate cut? Do you think there's an accounting scandal? Because it's not like this. It's like people say, oh, there's an accounting scandal in Tesla. Has anybody proved anything in accounting scandal in Tesla? So
People are saying
is
that
one
about
thing.
Nvidia
So,
now.
yeah. So thing is like, yes, you can say, but you have to put something out there. Okay. Yesterday there was something short report came on HIMS. Sometimes see how Vlad Tenev of Robinhood behaves himself. Does he behave like a CEO of a brokerage? He behaves like he's a CEO of a tech company.
Yeah.
Is Robinhood a tech company? No, Robinhood is not a tech company. They have a tech product for a service.
I think about this with
Okay.
David Velez, Max Levchin, Brian Armstrong. Those are tech companies or tech CEOs that are running fintechs.
So see, like when the whole GameSpot saga happened, Vlad Tenev went almost like low profile for years. And then since last year, he again came into high profile mode.
Yeah.
Okay. So thing is, there's a lot of things on face value. There are a lot of things on numbers. We see in numbers, SoFi is to me at least, it seems a very attractive opportunity. That's why I have invested. Okay. If there is something which is wrong in numbers or not published, yes, I mean, I'll lose my money, and in that case, I should deserve losing money, to be honest. Okay. So if people at this point, they say convince me. A lot of time I sit with people, and I mean, they just ask me, convince me to buy this. I said, you don't do this. I will not never convince you to buy anything.
Mm-hmm.
Okay. You don't want, why should I convince you? Okay. So anybody who doesn't want to invest and anybody who cannot evaluate at this point, you see, our job is to provide our views and information if somebody is missing. Okay. So when Amit and I and Chris, we were doing Palantir Weekly, the idea was we wanted to share our views, and we wanted to, that's important because that was a tough time.
Right.
Okay. There was a lot of misinformation. We felt that as a part, but we didn't say anybody to go and invest. No? And people, I hope, not invested because we said them to invest. Okay.
I
mean,
win
you
all
guys,
because of you. So
yeah,
I'm just kidding.
I mean, you guys know me for a long time, at least we interact via Amit and all that. And the thing is, I have not invested because Amit was on SoFi Weekly or because you guys are running SoFi Weekly. I listened to you. So if I came, I started nibbling small pieces, making a small trades. Okay. I started it doing Q2 last year. After 1 year, people say, oh, sometimes people get so excited, oh, this is the opportunity we need to enter now. No, it took me 1 year to make that investment. And then my first reaction was, shit, I entered too fast. Okay. So thing is like, see, investing is risky and you need to do a lot of hard work. Okay. And if you are entirely relying on somebody, yes, you can be lucky. There can be someone around you. Okay. There are people who were friends with Warren Buffett and they made money because of Warren Buffett. That's happened. Okay. But you remember that there's a dialogue in margin call. No? That's what I say, that you can make money in market 3 ways. Either you are smart, you are early, or you are a cheater. We are not cheater. And had the hell I invest. Like a lot of people like in smart, but we want to be the first. So the thing is, if you're not a friend of Warren Buffett, then you cannot be the first. Okay. That means you have to be the hell out of a smart guy. There is no other way. And people, and this is another thing, and I'm so pissed off because people say invest like Warren Buffett. No, we cannot invest like Warren Buffett. Do you know how Warren Buffett invests? Warren Buffett is selling puts on S&P for 100 years dated. How much cash he collects? Warren Buffett wants to invest and control a company that is 100 million. He has to only put 10 million. Banks and other people will put 90 million, but he will control the company that has by putting that 100 million. He goes to Oxy and he says, I'm going to invest money, but I need 8.25 dividend and I need preferential options. Can you do that? No, you cannot do that. And Warren Buffett knows people cannot invest like him. So he never says invest like me. He says this is how a common investor should invest. He says that people, if they try to copy me, they'll go bust. So he never says invest like me. He says a common investor should do that. And the whole finance media take that because he's saying a common investor should do. This is how Warren Buffett invests. No, Warren Buffett doesn't invest it. Warren Buffett has taken stakes sometime as big as 50% of his total portfolio into a company. Can you buy a company and take private? No, you cannot. Why he buys companies in insurance? Because he gets the capital and he is very good in capital allocation. Can you do that? No, you cannot do that. So what the media says about company and investing, and what investing in general is, I think as an investor has to be aware enough to differentiate it. If you cannot differentiate it, you should invest in ETFs of indexes. End of story.
Yeah. Oh, that's great. That's great advice. Sachin, we're going to have to wrap. Is there anything else that you want to promote aside from your X, which is on screen at Sachinvats?
No, man. I try to share more, but I'm busy in few things at my end, so not able to do. I want to write regularly on companies, haven't happened. But yeah, to see the people like me, you need when your investments are in shitty conditions. Somebody has to show you a mirror at times. Okay. When investments are good and markets are good, you don't need people like me. There are a lot of people who can come and tell you what to do.
Sure.
Okay.
Yeah.
Okay. So see, the investing is tough. If you're not there to put hard work, please don't expect returns. Okay.
Good
This
point.
is a reality. I have seen it in several cycles. I have heard it from people. Okay. You can have small wins, but you cannot leave as an investor. And I'm forcing myself to leave as an investor. So I know what hardship I go through. Okay. It is more grueling than my consulting life in BCG or used to be. It is more grueling what my operations lead life used to be in Schlumberger, where I used to run operations on an oil and gas asset. It is more difficult than that. Okay. But it is a learning that's going to stay with me for the rest of my life. Okay. So yeah, be there for hard work. Only then you can reap some rewards out of it.
Ladies and gentlemen, I think that this comment sums it up. Sachin, you've been an amazing guest. I really appreciate it. You've given a lot of insight, not only into SoFi, but also into just simply how to look at the stock in general, playing things safe and looking for opportunities in an asymmetric manner. Yeah, Please follow him on X.
Well,
And thank you all so much for watching. Thanks for coming out. Until next time.
and thanks
Bye
for
for
the opportunity. Apologies for delay, but I'm glad I finally able to make it. It's glad to meet
No,
all three of you.
It was
And I
perfect
love
timing.
I love all your Palantir references. So I've been priming these guys. You know, they don't get it, but they kind of get it. So appreciate another Palantir bull being on here with me too.
All right. Bye, guys.